Got business news for you now here on the programme. Delana Souza's with us here. Delana, you're starting off with that lower than expected GDP growth rate coming out of China.
That's right, Stuart. Good morning to you. The Chinese economy grew at its slowest pace in 24 years. GDP growth last year came in at 7.4%. That's a 0.3% drop from 2013. Now, while this rate of growth is still miles ahead of what we see here in Europe, it highlights fears that the world's second largest economy is in fact slowing down. Now, for more on this, I'm joined by our correspondent Rachel Rubel, who is in the Chinese capital. Good afternoon to you, Rachel. Why are we seeing the Chinese economy growing at such a slow rate? Are the days of two-digit growth really behind us?
Well, in 2014, the once red-hot property market here in China started to cool down, and we're also starting to see China face increasing pressure to move away from its over-reliance on heavy industry and trade and more toward domestic consumption. So that's really putting a lot of pressure on the Chinese economy. Now, last year in 2014, the Chinese government tried a number of soft stimulus measures to try to hit that 7.5% target growth rate. Notably, the central bank in November unexpectedly lowered interest rates for the first time in 2 years to lower borrowing costs and also to stimulate growth. It also eased loan restrictions, try to get banks to boost lending, but of course none of those measures really helped to jog the economy. We saw that 7.4% figure come in this morning. Now I should mention though that was actually above market expectations. Some experts had actually expected it to come in lower at 7.2%. So the markets here over in China actually responded quite favorably to that news this morning.
That's right, Rachel. Now, last year, the Chinese president indicated China's economy had entered what he called a new normal. If this is in fact the new normal, will Chinese authorities now sit on their hands or will they try and resuscitate growth?
Right. Well, as you said, the Chinese Chinese President Xi Jinping did call this the new normal, and we've heard government officials say that they were okay with this number coming in just below the target growth rate. Now, you have to remember that 7.4% annual growth for any other country in the world would actually be really good, but of course this is China, which is the fastest growing of the major economies in the world. Over the last 3 decades, we've seen annual growth of an average of 10% here, hitting as high as 14% in 2007 before falling back in 2012 and 2013 to 7.7%. Now, we are expecting to see a number of new stimulus measures this year, but we will have to wait and see because the government officials will be meeting in March to set their target growth rate for 2015. So we'll just have to wait and see, but it does sound like it could be the new normal.
Okay. Rachel Rubel, thank you very much for that insight from Beijing.
Now then, we also have the IMF coming out, slashing its global growth forecast, don't we?
That's right. The global economic body lowered its growth outlook for the next 2 years. The IMF downgraded projections it issued last October by 0.3% for this year and next. It sees global GDP growth for 2015 at 3.5% and 3.6% for 2016. Now, while the picture does look bleak, there is one bright spot. Stuart, any guesses?
Absolutely no idea.
The IMF has upped its growth forecast for the United States. It's projected a 3.6% GDP growth rate for the country this year. Forecasts for Europe and China over the next 2 years have been slashed. Let's take a listen to why the IMF sees a continued slowdown in the world's second largest economy.
We have revised our growth projection downward from 7.1 in October to 6.8%, in part because we see this healthy adjustment in the real estate sector going forward. This is going to be a multi-year process where, of course, investment demand will be slower in order to facilitate the adjustment.
So Delano could only find one positive thing. How are the markets reacting then to all the negative news, Delano?
Well, surprisingly well, actually. While China's GDP growth for the year was lower, growth for the fourth quarter was a little higher than estimates. On Monday, we saw the Shanghai Composite drop nearly 8%, and we are seeing a soft bounce back in trade today. Meanwhile, the Nikkei ended Tuesday's session up 2%, green in Hong Kong as well. The Hang Seng over there up around 0.7%.
Delano, thanks very much. Delano Souza with the business. By the way, if you're with us at this time tomorrow, we'll be bringing the business news live from Davos, of course, for the World Economic Forum. Stephen is there for us from tomorrow.